Hi everyone, welcome to Digital Expert. The small cap stocks often fly under the radar, but they hold incredible opportunities for growth, especially for investors who can spot the right ones early on. Many of the big companies we know today started out as small caps, and early investors made a fortune by investing in them. Take the example of the legendary investor Rakesh Jhunjhunwala. Many of his early investments were in small cap or mid cap companies that no one paid attention to back then. He spotted the potential in these businesses early, held on to them, and watched them grow into massive wealth creators. The stocks like Titan and Lupin were once small or mid cap companies, but they became multi-baggers over time. In today's video, let's discuss 5 small cap stocks. So these stocks have market cap less than 5,000 crores. In my previous video, I shared how to find the multi-bagger stocks using the fire screener. If you haven't seen it yet, I highly recommend watching it. I have given the link in the description and the pinned comment. Don't forget to subscribe to this channel and share my videos with your friends and family or anyone who might be interested. So let's get started. I'm not a SEBI registered analyst, so do your own research before investing in any stocks. The first stock we are going to discuss is a prominent manufacturer of electrical installation products. So this company is recognized as the largest manufacturer of cam-operated rotary switches and wire ducts in the country, holding over 40% market share in the rotary switches. The company operates 6 manufacturing facilities in Tamil Nadu and exports to over 50 countries. The market cap of the stock is 2,602 crores. The stock I am talking about is Salsa Electronics. The current price of the stock is 1,468 rupees. Their switchgear products include cam-operated rotary switches, Lord break switches, general purpose relays, and motor protection circuit breakers. So Salsa is a big name in the smart meter market. The global switchgear market is around $94 billion at present and is expected to reach approximately $150 billion in the next 7 years. So this growth should be mainly driven by increasing demand for electricity used in transportation, renewable energy investment, rising electricity needs for manufacturing and replacement of the old switch gears. The Indian switchgear market is projected to grow exponentially with a CAGR of over 8% in the next few years because of the investment growth in infrastructure and industrial segment across the country. Most of their business is domestic with 90% of their revenue coming from within India but also growing internationally. They export their products to over 40 countries and 10% of their revenue comes from these exports. They also make motor control products and industrial components and transformers. Due to the higher demand for industrial switchgears as well as wires and cable segment, there is high demand for products like three-phase dry-type transformers, wire harness and relays. The future outlook is extremely bright for Salsa Electronics and is strategically positioning itself to the changing economic and technical landscape by broadening its product portfolio. The company has demonstrated consistent growth with a compounding sales growth of 16% for the past 10 years and a compounded profit growth of 18% over the same period. In terms of the revenue breakup, the industrial switchgear business contributed 62% of the total revenue, growing 34% year on year on the back of 12% EBITDA margin. The price to earnings ratio is 38.67, lower than a sector P ratio of 80.02. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 12%. The second stock is an IT solutions and services provider specializing in innovative cloud and data management solutions. So this company's products and solutions include data center solutions and end user computing, IT-enabled services. So this is a fast-growing IT company. The market cap of the stock is 2,674 crores. The stock I'm talking about is Orient Technologies. The current price of the stock is 643 rupees. So Orient Technologies got listed 6 months back. They operate across 3 major business verticals. The first one is the IT infrastructure solutions. So they provide comprehensive data center solutions from servers and storage to networking components like switches and routers. The second one is the IT enabled services. So this vertical includes managed services, IT facility management, network operations center services. The third one is the cloud and data management services. As businesses migrate to cloud, Orient Technology specializes in transitioning workloads from traditional data centers to the cloud, ensuring scalability and efficiency. Orient Technology serves industries such as pharmaceuticals, healthcare, banking, financial services, insurance, information technology enabled services, government, and PSUs. The clients include big names like Blue Chip Corporate Investment Center, Tradepool Securities, Call India, and Masagan Dock Shipbuilders. Looking at the revenue breakdown, the IT infrastructure products and services contribute about 52% of their revenue. IT-enabled services accounted for about 22%. The cloud and data management services make up the 26%. With an outstanding order book worth 100 crores, Orient Technologies has a strong pipeline. Notably, 20% of their orders come from the insurance sector and 30% from the PSUs. The top 10 customers accounted for 38% of the revenue. Price to earnings ratio is 54.15, higher than a sector P ratio of 35.33. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 16%. The third stock is a prominent player in the Indian manufacturing industry, specializing in air conditioners, EPS packaging, and pre-engineered buildings. So this company has achieved the milestone of being the largest processor of EPS packaging in India. This company is the second largest original design manufacturer of RAC in India, with a market share of 25% in domestically manufactured units. The market cap of the stock is 5,059 crores. The stock I am talking about is EPAC Durable. The current price of the stock is 527 rupees. They specialize in manufacturing room air conditioners, including window and split ACs, and hold a 24% market share in domestically manufactured ODM units. Their product portfolio includes a variety of complete air conditioners, ranging from window ACs to split ACs with different capacities and energy ratings. The company supplies to major clients like Blue Star and Voltas, maintaining long-term relationship. The company forecasts a 40 to 50% revenue growth for FY25, with the air conditioning segment projected to grow at a comparable rate. It has consistently maintained strong financial metrics with an average ROE of 9.5% and ROCE of 19.2%. Price to earnings ratio is 106.28, higher than a sector P ratio of 89.38. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 5%. The fourth stock specializes in designing, manufacturing, and supplying advanced heat exchangers. So these products are crucial for efficient heat transfer between fluids used in heating or cooling application. They serve industries like oil and gas, chemical processing, power generation, refrigeration, and HVACs. The market cap of the stock is 4,682 crores. The stock I am talking about is KRN Heat Exchanger and Refrigeration. The current price of the stock is 753 rupees. So KRN's diverse product portfolio includes condensed coils, evaporator coils, fluid and stem coils, and even custom components like headers and sheet metal parts. The revenue is majorly driven by condenser coils, contributing a 55.24%, followed by evaporator coils at 37.49%. So these products are not just high quality products but also cater to a wide range of industries, making KRN a versatile player. The company operates 2 state-of-the-art manufacturing facilities in Rajasthan with an impressive capacity utilization over 84%. They produce over 500,000 units of evaporator and condenser coils annually, along with other critical components. So KRN is well positioned to meet the growing demand both domestically and internationally. Their top 10 customers account for 72.5% of their revenue, with the largest customer contributing about 33.5%. With a strong manufacturing base and a diverse product portfolio and ambitious expansion plans, the company is well positioned for the growth. The price to earnings ratio is 119.75, higher than a sector P ratio of 71.72. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 13%. The fifth stock we are going to discuss is from the jewelry industry. So this stock is a leading manufacturer and exporter of gold and diamond jewelry, catering to global retailers. department stores and wholesalers. They have a strong presence in international markets and has built a reputation for quality and innovation. The market cap of the stock is 5,612 crores. The stock I'm talking about is Goldium International. The current price of the stock is 525 rupees. So Goldium offers a diverse range of products including engagement rings, wedding bands, anniversary rings, bridal sets, earrings and pendants. What's fascinating is the transition from a pure natural diamond company to a major supplier of lab-grown diamond jewelry. So this strategic shift has positioned them as a leader in the modern jewelry market. In the quarter 2 results, the lab-grown diamonds contributed about 77% of their revenue, while natural diamonds accounted for about 23%. It's clear that the lab-grown diamonds are the future and Goldium is ahead of the curve. Goldium's customer base spans the globe with 95% of the revenue coming from USA. The company sells 80% of the jewelry to retailers and 20% to wholesalers, focusing heavily on the premium markets. Their diamonds are preferred choice for luxury buyers. From growing lab-grown diamonds to cutting, manufacturing and distribution, the Goldium ensures smooth communication, faster turnaround times and efficient product development. Goldium's dual fleet platform targets small and independent jewelers in North America, reducing the delivery times from 8 to 10 weeks to just 1 week. So this innovation is reshaping the B2B jewelry segment. Price to earnings ratio is 59.37, lower than a sector P ratio of 79.75. Debt to equity ratio is lower than 1. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 14%. If you like this video, don't forget to subscribe to this channel and thank you for watching.